In this video, I want to share with you 3 banks that will approve a new LLC up to $50,000 without proof of income. This means you can go to first bank and get up to $50,000, no proof of income. The second bank, get up to $50,000, no proof of income. And the third bank, get up to $50,000, no proof of income with a new LLC. I'm going to break down, I'm going to unpack how is this possible. Then I'm going to tell you what you need to do as a business owner to properly position yourself to get approved up to $50,000. Then the third thing, I'm going to share with you the 3 different banks where you can go to get capital, to get funding for your new LLC. Now, before I do that, I want to say this. Around 10 months ago, if you go back 10 months, I made a similar video. I gave you 5 banks where you can go to get up to $50,000 with a new LLC with no proof of income. And from there, you see a lot of people make similar videos from TikTok, from YouTube, all different types of content creators. See, what they was doing previously, they were telling you no documentations. But as I was reading them, I was doing my due diligence, a lot of you were still confused. So what I brought to the table, I broke it down in the most simplistic way and the most fundamental way on where you guys can really understand why is this possible, right? So in that first video, it got over, it's almost 1 million views. It went viral because how I broke everything down. So I'm going to do something similar to this video, but also I'm going to give you 3 additional banks. Then I'm going to do a little bit different as far as I did in the first video. So I want to throw that disclaimer out there. Your boy was the first one to actually break this down so you guys can really understand why the banks will allow you to get up to $50,000. So I really want to start there, right? Why is this possible? Well, here's the thing. If you think about it, the first reason why most banks will allow you to just, number one, state your income. I'm going to break that down. Also project your income. I'm going to break that down, exactly what that means. The first reason is because it'll take a lot of manpower and it would take a lot of due diligence on these financial institutions, on the banks and on the creditors to really break down and verify your income, aka your debt to income ratio. So what they allowed you to do is to state your income, and they will take your word for it, and project your income, and they will take your word for it, because it will take too much manpower for them to actually go through each credit application to verify your income. The only reason they will actually verify your income, so when people tell you no documentations, what they're saying is banks will allow you to just put your income without verifying because it will take too much manpower, and everybody knows time is money. So that means they have to hire more staff, the payroll will be bigger, so they will take your word for it. However, there's still certain things that needs to be on that business credit application that makes sense, and on that personal credit profile and business credit profile for everything to line up. So when it go through the algorithm, because that's all it is, the algorithm, once it go through the algorithm, then if everything lines up, then they will approve you without showing any or to little no documentation. So that's what that means when people say no docs, right? So I just want to break that down on why this is possible. Now, let's jump into stated income, projected income. First of all, when you're going to get business funding, by now, if you've been following me, you should understand exactly what business funding is. That's what we're talking about now. Funding means money. Credit means going to other companies to open lines of credit. So let's break down business funding. Business funding, when you take your brand new LLC, and you also going to take the business owner credit, aka your personal credit, you're going to put the two together, and you're going to go to these financial institutions, national banks, regional banks. Now today we're going to talk about regional banks, but national banks, because last time I gave you 5 banks, they was national. But regional banks, community banks, credit unions, right? You can go to these financial institutions and open up lines of credit or credit lines with these banks. This is possible. Why? Because your business needs to be properly structured. That's number one. This means you have to have an LLC, a separate entity like an S corporation, C corporation, or LLC. So first thing first, also have an EIN, business address, professional phone number. I'll show you how to properly structure your business if you subscribe to my Patreon, right? The link will be in the description, and I'll show you everything that I'm talking about. I break down. It's also in there, and it's going to be step by step on how to do everything. So if you want to be a member of some type of mentorship, right, you can definitely subscribe to my Patreon. The link will be in the description below. Now, moving forward. So once our business is properly structured, I'm not going to go over that because I talk about that all the time. It's the most fundamental thing you need to make sure that needs to be in play. But also you need to make sure that your personal credit is in play. Also your business credit profile. Because did you know 95% of business funding is based on your personal credit? We need to really get that in our heads. There's really no way around it. Right? So you have to give the bank something. I explain to you this all the time. Either you have to get them you have to have a really good business credit profile. And what I mean really good business credit profile, I mean age business trade lines, age business. That means more than 2 years. Your business trade lines is more than 2 years. You have to have hundreds of thousands of dollars or even $1 million in revenue, right? In order for your business to stand alone by itself. That's the first thing we need to understand. If this is not you, if this is not your business, it can't stand alone by itself. You have to attach something to it. This means you have to attach some type of business income, that revenue, or you have to attach your personal revenue. Or you have to attach your personal credit to your business. You have to give the bank something. So the reason why the banks allow you to state and project your income without showing no proof of income, because the banks only care about two things: your willingness to pay them back and your ability to pay them back. Your ability is based off your revenue. So we're not going to talk about that. We're going to talk about your willingness. Are you willing to pay them back based on what? Based on your business credit profile and based on your personal credit profile. So now what the banks is going to do, since they're going to take your word for it, not because you have a sob story, not because the environment you grew up in, everybody have different environments, everybody have different sob stories, everybody just have a different story in general. So that's not what they're looking for. They're looking for the data that's on your personal credit profile and also that's on your business credit profile. Now, if you don't have any data on your business credit profile, 100% is going to be based on your personal credit profile. This means certain data points have to be there. Like, for example, do you pay your bills on time and over a period of time? That's your payment history. Essentially, that's all credit is. Do you have the ability to pay your bills on time and over the period of time? Right? Credit in a nutshell. Now, number two, how long have you been managing debt? Your personal credit profile. Has it been, aka your business age? Has it been 2 years, 5 years, 10 years? That matters. Now, also, can you manage debt? So look at your credit utilization. Is your credit utilization 50%, 30%, 10%, 5%? That shows them how well, if they decided to lend you any type of funding, if you're managing the funds on your personal credit profile, then that's a reflection on how you would manage the funds on your business credit profile. That's called comparable credit. Next thing that go along with comparable credit is the amount of limits you have on your personal credit profile. Do you have a credit card for $2,000? Do you have a personal credit card for $5,000, $10,000, $25,000? That makes a whole difference, because now they say on the personal side, if you can manage $25,000 in debt, then on the business side, you can manage $25,000 in debt, right? Or somewhere near it or below it or even above it. So because in a business side, they understand that you have operating expenses. So you will have to spend money to make money. So they want to make sure that they give you adequate funds in order for you to start, grow, and scale your business. Unlike the personal side, there's only so many things you need to, maybe you have an event or you have a home and you have to furnish your home with 5 TVs. But on the business side, you have any business event space and you need 20 TVs, right? So they're going to give you a higher limit. So these are the things that they look for on your personal credit profile. Yes, it's predicated off your personal credit profile. There's really no way around it for 99% of banks that's out there. Now, that's 1 or 2 banks that will EIN on. Again, certain things have to be in position. Now, also, that's on the personal side. There's some data points. Now, when you're filling out that business credit application, it's really important that you put certain things on that business credit application. I talk about this all the time on my Patreon. Again, if you want more information on this, more elaborate and detailed breakdown, step by step, you can definitely go to my Patreon and become a member and get some mentorship that you need in order to start, grow, or scale your business. Now, also make sure you like and subscribe if you like the information that I'm giving to you so far. So on that business credit application, right? Some of you are putting that you the big CEO of your company. And I get it. We're excited. We just starting a business. We want to show everybody that we the owner, we the founder, we are the CEO of our business. But understand, when you put that on that business credit application, now you obligated to show them that you the owner, you the founder of your business. Let's break that down and unpack exactly what does that mean. Well, now they might want to see tax returns because, hey, CEO, big founder, right? A big owner of your business, you should have tax returns for your business. Or now they might want to see certain documentations like financial statements, like P&L statements. They might want to see bank statements or payroll. Since you're the CEO of your company, you should have access to all of this information. So you want to be very mindful exactly what you put down on that business credit application. I recommend putting down some type of that you're the manager, something like that, because you are the manager of your business or you are an employee of your business. So you want to really think about that, what you put down as far as what role you play in your business. So that's number one. Also, your revenue as far as when you state your income. So let me break down exactly what stated income means. Stated income means that you can state the amount that you put down on that business credit application. They will take your word for it. So for example, if you put down that you make $100,000 in your business, the banks will take your word for it. And the reason why they would take your word for it, because they're looking at your personal credit profile or your business credit profile, both, and they see that you pay your bills on time and over the period of time. So some revenue has to be coming in somewhere for you to be able to pay your bills on time and over a period of time. Then you're managing that debt, etc. So all that data has to match up. So when you put down that you make $100,000 in your business, they will take your word for it. Also, now you're able to project your income. So when it comes to your business revenue, let's say you're not even making $100,000, but you put that down on your business credit application. Why is this possible? I'm not telling you to commit bank fraud, right? There's no way I'm telling you to commit bank fraud. But banks allow you to project your income based off your business plan, based off your future invoices, based off your future revenue, based off your future contracts. So banks will allow you to project your income. What do you think you're going to make, right, throughout this year? You can put that down based on the way your revenue is going, based on your market strategy, etc. You can put that information down. That's really important. Also, did you know you can also put your household income down? So let's say you have a spouse, you can put their income down, right? Let's say you have a side hustle, you can put that information down. You get money from stocks. So there's certain things you can put down on that business credit application that the banks will allow you to improve or to increase, I should say, your personal revenue. So we have to keep that in mind too. So if you put down the right business income, you put down the right personal income, you put down a position that you're in your business, it can go a long way in that business credit application. Remember, everything has to pass through the algorithm. So if your personal credit profile match up, your business credit profile match up, it's properly structured, your income match up on everything. So now they're looking at your overall debt to income ratio, which is super important. So now they're looking at your debt to income ratio, everything match up, and now they will approve your income. Now, the main question you need to be asking, well, what about my limit? Well, your limit is based off a few things, right? How do you get high limit? So your limits is based off of your debt to income ratio, that amount, which is your business revenue versus, which is your debt versus your revenue that you're making in the business, that determine your debt to income ratio. Lenders like to see anything between 35% or lower, just depend on that financial institution. Some will go as high as 45%, right? Again, just depend on that bank. So you want to be mindful of that. Also, it depends on your personal credit profile. What trade lines do you have on there? Revolving trade lines. Is it 5,000, 20,000, 25,000? So all that is predicated on that. So you look at that information too as well. Also, you want to make sure, here's another hidden gem that a lot of people don't understand. Having a relationship with that financial institution. After this, I'm going to give you the 3. So if you've been following this time, but I have to break everything down. So now, building a relationship with that bank. I talk about this all the time. So when you go inside the banks and you build a relationship with a relationship bank manager, now depend on this can depend on your business checking account, your personal checking account, but I recommend open up a business checking account and building that relationship. And your limit can also depend on the amount that you deposit into that bank. So because it's something that's called bank credit, which is a whole different story between business credit, business funding. Then you have bank credit. That's primarily based off your bank rating number, which is predicated on the amount that you have in that business checking account over a period of time. So that can also matter. So as you can see, there's a lot to unpack, but if you do it strategically, you can get approved up to $50,000 without showing any proof of income. Now, the reason it's up to 50 because when you get over 50, now they want to see like tax returns because now they're taking a more of a risk. Remember, it's all about risk factor on your business. So when you ask them for that a certain amount, then yeah, they want to be more thorough on what they really getting themselves into. So you got to be mindful of that. So that's why when I say up to $50,000 or other content creators say up to $50,000 because that's really the thresholds that most banks will provide. Now, I want to be very clear when I say this. That does not mean that you can get up to $50,000 just with one credit card, because it might take you 2 to 3 credit cards with that one financial institution to get the sum of $50,000. That's super important. So don't think on one credit card you're going to go in there and get $30,000 if you don't have a relationship with them. If you can't prove that you can manage debt on a personal side or on the business side, and that you didn't, as far as build that relationship with them by having a certain amount of income in your business or your personal checking account. So otherwise you might get a lower limit. So, or it might take you 2 to 3 credit cards to get with them in order to get up to $50,000. Are you tracking me? Now, I know that was a lot of information, but I really want to break it down because, again, I'm seeing all these new videos and it all started with me, pat myself on the back, right? Because of how I break things down. But with that being said, let me give you the 3 banks that will give you up to $50,000. Now, I want to be very clear. These are regional banks. Regional banks mean it might not be in your area. It might not be in your area, so you might not qualify. But there's certain things you can do, like file a foreign entity to get qualified in that particular area or that particular state. You can file a foreign entity. I teach this again in my Patreon, guys. These are the stuff that I teach in my Patreon. Again, it's a form of mentorship. So those of you, do you offer mentorship? You definitely want to check out my Patreon. Now, here's the thing. You want to go to Bank Branch Locator, bankbranchlocator.com to see if these banks is in your area. Branchlocator.com. So go to that and look up these banks and see if it's in your area. Now, the first bank I want to give you is BMO Harris. So BMO Harris is a regional bank. And the great thing about BMO Harris Business Platinum Credit Card is 0% interest for a limited time, 9 months. So 9 months, you can get and they report to TransUnion. I'm even give you the bureaus, that the credit report agency that they report to, because that's really important when you start doing credit stacking. They report to TransUnion, right? So BMO Harris get their platinum card, 0% interest for 9 months. The next bank I have on my list is Huntington Bank. You can get 0. It's a regional bank. So go to the site, go to branchbanklocator.com, and they can give you a 0% interest credit card up to 12 months. So 12 months, you pay no interest on it, and they report to Equifax. So this is really important too. That's the second bank. The third bank I want to give you, what's the third bank? Oh, M&T, right? It's another regional bank. You have to see if they're in your area, but you can get 0% interest for 12 months. So those are the 3 regional banks where you can get up to $50,000 with a brand new LLC without no proof of income. Hope this is very valuable. Like and subscribe to the channel, and I will see you on the next one. Peace out.